Let's talk markets here on RealAg Radio. We're joined right now by Jim McCormick. He is with agmarket.net. Hey, Jim, it's great to see you again.
Hey, Shaun, thanks for having me on. Good to see you as well.
Yeah. Okay. So I guess as you look at the overall ag commodity complex right now, how would you describe where we're at this point here as people are wrapping up seeding and planting for the good part of North America?
Well, it's almost two kind of different dichotomies what's going on. I mean, I think you got to look at it just more like almost in continental type of regional parts around the world. Let's start with the wheat market. The wheat market has just exploded here recently, but that has not really a lot to do with what's going on in Canada or even the U.S. That all has to do with what's going on in Russia and the Ukraine. I mean, first they were dealing with drought issues. And then the Russians got hit with a pretty hard frost. There's still debates on how much damage has actually been done. And now they're dealing with more heat. So the wheat market has really been running more on a situation of how much rationing of wheat maybe have to do in the world market if Russia's crop was really hit. Now, on top of it, you've got a situation going on in India. India has driven its reserves, its domestic carryout to like 18, 19-year lows. And what's happened, Shaun, is the president of India has in essence been dumping food out of their supplies onto the market to drive down the price of wheat. Because, hey, guess what? They're in a presidential election and he's trying to keep food prices cheap. So that the wild card I've been watching was, well, what does that actually mean to the international market per se? Because India traditionally doesn't import wheat. So if they would start to import wheat, it could really kind of shift the balance sheets around in the world. And guess what happened today? Overnight, India came out and said they're dropping their tariff of 40% wheat import through the summer. They'll probably put it back on when they try to essentially during the fall harvest of their wheat crop. But right now they're lowering that tariff as a way to bring some wheat in. So if India really gets aggressive buying wheat onto the world market, now you've got a big country with a lot of people to feed that's all of a sudden stepping in and is now going to compete maybe against like a traditional importer, say like Egypt. And it could really disrupt the market and really drive wheat prices into a very higher to very volatile situation. And I think that was partly what's been driving the wheat market up. So the wheat market's got a supply situation that's looking relatively friendly. On the other hand, recently in the grain markets here in the States, we're getting the crop planted, and it does feel like we're kind of shifting away from, hey, we're not going to, rain is hindering the crop. We're not getting it planted to, hey, now kind of a more of a rain makes grain mentality. The U.S. government just came out and said, hey, planting progress here as of last Sunday was pretty much right at the 5-year average. So this crop is getting planted, and now we're going to look at the U.S. balance sheets, which will look a little bit cumbersome without a major weather problem.
Yeah, and as you move that to the north into the Western Canadian prairies, there's a lot more moisture than we've seen in the last 5 years across the bulk of the geography. How soon does the market start to pay attention to if we get the heat and obviously we're going to need some more moisture through the growing season. We're going to be off to a pretty good start here. How soon does the market notice that, wait a minute, production may be a little bit better here than it's been the past number of years?
Well, I think there's a couple things. The first one, we just, hey, we got to get the crop out of the ground. We'll see how it is. I think there's a little bit of concern here in the Midwest. Iowa, one of our bigger corn producing states, they went from incredible. I mean, we had to look at a drought monitor a year ago or even 6 weeks ago, 7 weeks ago. It's amazing how dry they were. They've just been absolutely hammered with rain. It's one of the wettest rain Mays on record, but they are getting the crop planted. Now, the real question is, what does that do to the condition of the crop? And we don't get our first condition ratings till next week. So I think depending on how this crop ratings look, if this crop looks like it's off to a really good start, the conditions look good to excellent or at or above average, I think it'll continue to start the market peeling away a weather premium at the moment. But then we also, as a trade, we tend to gauge into going that 4th of July week, summer solstice into July. Think about it this way, Shaun. Our weather maps go out about 1 to 2 weeks. You get out 1 to 2 weeks after that, it really becomes a stretch. You end up latter part of June, first part of July, and we're not seeing extreme heat, or we're seeing heat with rain. then I think the market just starts to bleed lower. Right now, our latest forecasters are the guys we like to talk to say what they believe is going to happen right now is there is a drought going on. It's not in Canada per se. The real everyone's watching is the drought that's going on in Mexico.
Yeah.
They've been very, very dry. Now, the question is that heat going to start working its way up into like the U.S. Rocky Mountains and essentially put an upper level high over the southwestern plains, Arizona type situation. What'll happen is that'll bring rain up over that ridge into the northern part of into Canada, swing down into essentially the Midwest, and bring you essentially a warm summer, but a very wet summer with a lot of storms per se. And that's where the models are starting to hint at. We don't really know where they're going to be at later May into June. Later June, excuse me, summer solstice into July. We should know. And if the weather does cooperate, the balance sheets do look cumbersome. I mean, the U.S. projected carryout is for beans per se is 445 million bushels for new crop. To get there, they raised demand 125 million. And the reason why I think that's a red flag is China has yet to buy one U.S. new crop bean. So that new crop bean carryout may be way understated by 50, 100 million. Now you got a few areas that are still wet in the Midwest. You might even pick up a few more bean acres. So that bean balance sheet is going to be very negative. And if it goes down, it's not going to be just very good for beans. It's going to be negative for all veg oils, canola oil, you name it, rapeseed oil. It's all going to become a problem. So, the weather's going to be the key. But right now, you look at the price of the grain, I would argue beans are probably a little bit overvalued, but maybe holding in there a little bit longer till they get a better handle of what this summer weather looks like.
Yeah, I just pulled up a December spring wheat chart, and you look in 6 weeks, 5, 6 weeks, we put a buck 20 on that market. So eh, how do we steer through this from a strategy perspective? We've heard a lot over the past 6, 9 months about, hey, sell into the rallies, right? Take some risk off the table. I've been hearing more and more producers saying like, this feels like 2020. What is the right strategy? We can stick with spring wheat. What's kind of the right strategy if you are trying to deal with your marketing for 24 crop?
Well, I think right now the right strategy is you saw how low prices got. Let's just go that way. Like I said, we've had one heck of a rally. And the difference for a lot of people is, wow, I wasn't making money to maybe I'm now making money. I think the strategy right now is you've got to look at your break evens, your cost of production, be it winter wheat, spring wheat, whatever it is. Say, where can I make money? Am I making money? And I'm going to argue you want to make sure you can lock in, sell it with a profitable level, use board of trade or something maybe to re-own it if you're worried about the what if. Because the one thing about the world wheat situation, right now, India crop does look good. I think they're still trying to keep prices down for the election. The U.S. looks like it's going to have a very good crop at this point. Remember, Shaun, we harvest the wheat crop 11 months out of the year. There's always a wheat crop coming online. Now, the wheat stocks of exportable countries is getting tighter. There is no doubt about it. But, if the U.S. ends up with a big corn crop, now the corn crop carry-ins are a little over 2 billion. The acreage number for the U.S. is around 90 million acres. If we get anywhere close to trend line yields, you're going to build that corn carryout to 2.1, 2.2. So all of a sudden, you've got a big crop, big carry-in, and then all of a sudden, maybe we feed more corn, a little bit less wheat, and all of a sudden that wheat supply situation loosens up a little bit. So when you just look at the overall economics of the risk of the upside to the downside, I'm taking this year as a viewpoint. I think you're better off selling a little bit too early than selling a little bit too late, because the dynamics between where we are in the world, the uncertainty in the world, the uncertainty with what's going on in China, in the U.S., we have a presidential election that is going to get very, very contentious it just is. I mean, the reality is, the way we elect people down here, with the electoral college, it's going to come down to a couple different states. And 10, 15,000 votes may determine who becomes president. And it's going to come down, so the uncertainty of it all could just unnerve the market per se and drive prices lower going into the fall for all commodities as people kind of take maybe a potential risk off approach. So if you have the opportunity to market profitable, I think that's your game plan in 24.
In the U.S., the economy has been tremendously resilient. not in, even talk of, potential, should there be a rate raise? In other countries, Canada, the UK, Europe, there's a lot more focus on rate cuts. Do those rate cuts, does that lead itself to improvement for commodity demand, or are those really detached?
Well, it does have an opinion. I mean, there's a couple things. If it's kind of the broader spectrum. You cut the rate, the economy keeps moving higher. Like I said, it is kind of funny. Americans are complaining about our poor economy, and as a whole, like you said, our economy is probably one of the better ones of the Western world per se, or even the world in general. But if the U.S. does cut rates, what happens is it does tend to stimulate spending per se. But the other thing it does, though, is you cut that rate, it could start having a negative impact on the dollar. Okay, we've brought a lot of money into the U.S. because of our higher interest rates, as people are trying to seek, money markets and all that. So if that interest rate starts to drop, the dollar will weaken, and that'll essentially potentially maybe on the ag sector stimulate some demand because our products will get a little bit cheaper on the international market, is what would happen if they would cut rates. Right now, the talk in the States is they're going to cut rates. It will probably be in September, but we're really walking a very tough line. I mean, if you ask an average person in the United States, they tell you, oh man, the economy is really not that good. It's just they're not comfortable about it. And then you say, well, how are you doing per se? Well, I'm fine. We just had more people travel in the U.S. on Memorial Day holiday we just had over a 3-day weekend. We had more people flying on Friday than ever on Memorial Day weekend. We had more people driving on record on Memorial Day weekend. So for a consumer that keeps saying, wow, everything is bad, they are certainly spending like everything's good. And that's what really is making it hard on the Fed to try to figure out what to do with these interest rates, because you're getting kind of two different storylines. But right here, right now, the latest talk is 1 to 2 rate cuts. But if they happen, it'll happen in the latter half of the year.
Yeah. Well, as somebody that was in the Minneapolis airport last Thursday, I can tell you there's a lot of people flying. It was insane how busy that airport was. As I mentioned, we're talking to Jim McCormick with agmarket.net. Jim, you mentioned something in the prior segment that I wanted to kind of circle back on, the fact that China has, up until this point, not bought a single bushel of U.S. soybeans. Is it a case of there's a preference here for Argentina, or what are they up to?
All right, there's a couple different arguments as what's going on. Now, part of it is Argentina had that very big drought last year. They've rebounded dramatically. They are selling product cheaper. Brazil has a very big crop. Now, they did take the top end off their crop in the latter part of the growing season with that flooding we saw in the Rio Grande do Sul region, but in general, they've got a good crop. So partly China is doing that. You got to remember, Shaun, China has invested a lot of money in South America, in ports, infrastructure, stuff like that. So part of it's trying to get their money back. But the other thing, but they usually traditionally do buy some U.S. product, and they just haven't done it. Now, there's one argument that says they're going more into just-in-time type of situation, just-in-time coverage. Instead of buying 6 months out, I'm just going to buy it as needed type of situation, per se, because their economy is very touch and go. They spent a lot of money recently trying to stimulate their housing market, but their economy is definitely not going in the right direction, per se, according to most accounts. The other argument, plain and simple, is the reality is, under President Trump, when he was president, he put a lot of tariffs on Chinese goods. President Biden came in, he did not relieve those tariffs. He kept them in place. And then here recently, he actually instigated even more tariffs on some China goods coming in the United States, specifically with electric vehicles and stuff like that. So you're looking at a question that is China, in a way, trying to push back against these tariffs. Because remember, when Trump had the trade war earlier, in the middle of his presidency, when they started it, what China do? China quit buying U.S. beans, and it tanked the U.S. bean market and kind of pulled a lot of the price of beans around the world. And that's the real question right now: is China just trying to send a signal per se that they're not happy with these tariffs? And right now, there's enough world supply that they don't have to buy the U.S. product. Now, it's one thing it is interesting, though, with the Chinese in the U.S. It's one of those weird little tidbits we'll be watching. It's kind of like what happened in Europe. Russia invades Ukraine. Europeans slap all sorts of sanctions on Russia, but they still import Russia energy because they kind of already kind of cast that die. The Chinese actually like to buy U.S. soybeans. And the reason why they like to buy U.S. soybeans, that's interesting, is our beans store better than Brazilian beans. So when you see them coming in buying beans off the P&W, if you're in Canada, you hear that headline of China buying off the P&W coast. What usually they're doing is they're buying U.S. beans to put it in the reserves. Now, there was a story out this morning saying China was going to sell 1 million tons of beans out of their reserves. Now, the question is, are we going to see them come in and maybe buy U.S. beans as a way to essentially recycle, get rid of the older beans, or bring in better beans? So we'll see if we can get some of that demand. But right now, it's a little bit unnerving to see that demand. And like I mentioned, if China doesn't come in and buy, our U.S. balance sheets, assuming they will come in and buy, and it could get really ugly. But, one thing interesting about our world right now is we disagree on the size of the South American crop, and we also just disagree on the size of imports from China. So, there's just a lot of uncertainty at the moment.
Where are those beans going then? What are, because we see we saw this during the pandemic where things move in different directions. Like our overall for soybean exports out of the U.S., which country is backfilling or filling some of that void?
Well, essentially what's happening is we're filling it more with, we're not selling more exports. If you look at the U.S., we keep losing export share to the world market every year. So what's happening is we're switching over and we're now using more and more of it for renewable energy. First it was biodiesel, now it's renewable diesel. We're going to use more and more of it. And for the United States farmer, that's going to be very critical. We build it out because, the fact of the matter is we're going to continue here in the U.S. We're going to continue to lose market share, I believe, to China or to South America, to China. Right now, Shaun, there is about 90 million acres of ground in Brazil right now. It is not rainforest. It is like shrub ground that just needs the infrastructure and the input of money to get that up and going. To put that in perspective, that's equivalent to the corn crop we're planting this year. Yeah. So I think we're going to continue to lose it. So American agriculture, what you're going to see is more and more demand domestically for renewable diesel, but that becomes its own problem per se, because for all my life, we crushed beans for meal and oil was the byproduct. Oil was kind of the ugly stepchild. Like, what do I do with it? Just get rid of it. As we transition over to an aggressive renewable diesel policy and it really builds out like some people are projecting it will, the real problem is going to be, what are we going to do with all this meal? Because we're going to have an excess supply of meal, and meal is incredibly hard to ship, rail, and that's going to be potentially our next problem here in the United States is what do we do with that product down the line?
Jim, same. I think everybody in this renewable diesel market is talking about this. It's whether it's soybean meal or it's canola meal, it's the same issue. What are we going to do with all of it? And obviously, there's a lot of people looking at the U.S. dairy industry as an example, but that becomes potentially the new export where like you said, it's tough to transport, right? And all the way to China, especially. So the economics of it are going to definitely be a factor.
And exactly, because the other problem you got with China is China has their own, look what China does. I mean, it's a very, China likes to import their own beans. And the reason why they like to import beans, and then they want that secondary. They want to drive that income. They want to make that money, that crushing industry. They want to buy the beans, crush the beans, sell the meal, sell the oil. So they don't necessarily going to want to buy our meal. And the other thing you got to look at, has the China hog herd topped out? I mean, part of the drive of beans and, bean meal in the world, was the growth of the China hog herd over the last 10, 20 years. Well, their population has peaked. They've reached peak population. They're going to see more people die. More people are dying than having births every year in China. They don't have a whole lot of immigration in China per se. So you got to wonder, have we seen that peak curve of demand for protein per se? So unless you really get that economy to expand and get more people to buy pork per se, you could see, maybe the demand for pork at least leveling out. So that still becomes the next problems. Who are you going to try to be able to essentially increase the protein demand, which increase maybe the demand for the meal, be it, like I said, canola meal, soy meal, whatever meal we've got out there in the world, which may be in abundant supply, or find a new need for a use for it per se.
Overall, though, are you in 24 here? Are you optimistic about the veg oil complex, soybeans, canola alike?
Right now, I'm a little bit pessimistic right now because I think in general, like I said, we're going to overproduce here in the United States. The veg oil market, the canola market, and the bean oil market, they all got excited a year and a half ago when everybody's like, look, this renewable diesel, it's going to take off. There's going to be this huge demand for it. And the fact of the matter is, it's coming. It's just not coming as quick as the industry would like. There was years ago they were saying, "Oh my gosh, we're not going to produce enough beans in the United States to fill that demand for veg oil." And I'm sure, Canada, they're saying that same thing. And then you look at where we are now, and like I said, our balance sheet is growing. It's going to continue to grow. And like I said, that demand's there. And it's the same thing for corn. I mean, we're losing export share to corn every year. Our ethanol market's topped out. We're going to EV. People don't, you may not like it, but the fact is, I believe, they spent billions of dollars building out the EV market. They're not going to go back. Now it's a way of building out this ethanol, turning it into, jet fuel in essence, that aviation fuel. I think they're going to do it, but it's going to take time. In the meantime, you got a problem that if you have good yields, we could overproduce here in the Northern Hemisphere.
Hey, Jim, great stuff. Awesome, well-rounded discussion as always. Really appreciate it.
Thanks for having me. Appreciate it.